6 months ago, Donald Trump promised your credit card interest rate could drop from 25% to just 10%. Millions believed him. The deadline came, nothing changed. But what happened next could save you far more money than the promise ever would. By the end of this video, I will show you the one phone call that helped many people to cut their credit card interest rate without waiting for Congress, the White House, or any new law. But before we get there, you need to understand why one of the biggest personal finance promises of the year quietly disappeared. Because once you know what really happened, you will stop waiting for someone else to fix your credit card bill and start taking control of it yourself. Let's rewind for a second. Earlier this year, Donald Trump made a headline grabbing promise credit card interest rate should be kept at 10% for 1 year. And almost instantly, the internet exploded. News channel covered it non-stop. Finance creator broke it down. Millions of Americans shared it, hoping relief was finally on the way. Honestly, it's not hard to see why. For anyone carrying credit card debt, a drop from 25% to 10% wouldn't just be a good news. It could mean saving hundreds, even thousands of dollars in interest. For a moment, it felt like a real change was coming. But then something strange happened. The conversation disappeared. Not because the problem was solved, but because almost nobody stuck around to see what happened next. When January 20 arrived, millions of people expected their next credit card statement to look different. It didn't. No surprise email from their bank, no lower APR, no nationwide announcement saying interest rate has been reduced. For most people, absolutely nothing changed. So, what happened? Here is the part that got buried beneath the headline. President can propose an idea. A president can push Congress to act. A president can pressure regulators. But a president cannot simply order every bank in America to lower credit interest rate overnight. A nationwide interest rate cap would require Congress to pass a law. Without that, banks are not legally required to change a single thing. And while millions of Americans were waiting for that promise to become reality, their balances kept growing. Their interest kept compounding. And every month they waited. It quietly cost them something more money. Now, here is the twist. While everyone was focused on what Washington was not doing, thousands of people were lowering their own interest rate anyway. And they were not using a new law. They were using strategies that have been available all along. So, where does that leave you today? Unfortunately, exactly where the bank wants you. Right now, the average credit card interest rate is still hovering around 20% to 22%. But averages can be misleading. If your credit score is not excellent, if you have missed payments, or if you are using a store credit card, there is a very real chance you are paying 25%, 28%, even over 30% APR. And here is what's scary. Most people couldn't tell you their interest rate if you ask them. They know their monthly payment, they know their balance, but the number quietly costing them hundreds or even thousands of dollars every year. Most never checked it. Let's put that into the real money. Imagine you are carrying a $10,000 balance at a 25% APR. Even if you never swipe that card again, interest keeps showing up every month. That's roughly $2,500 a year in interest alone if the balance remains outstanding for a year. Think about that. That's not paying off your debt. That's not building saving. That's not investing. That's simply the price of borrowing money. Now, imagine paying that years after year. Suddenly, waiting for politician to solve the problem doesn't sound like much of a strategy anymore. And here is the mistake most people make. They assume their interest rate is fixed. It is not. Banks change their interest rate all the time. Sometimes because market condition changes, sometimes because your credit improve, and sometimes simply because you ask. Most people never ask, which means the bank has absolutely no reason to offer them a lower rate. This is where the story takes an unexpected turn. While millions of Americans were waiting for Congress, others skipped the waiting altogether. Instead of hoping for a new law, they called their credit card company, and in many cases, they walked away paying less interest than they were paying the day before. Not because of politics, not because of a government program, because they knew something most people don't. And that's exactly what I am going to show you next. Let's start with the strategy that surprises people the most because it doesn't involve switching bank, applying for a new credit card. or paying anyone for help. It starts with a phone call, specifically a call to a credit card company retention department. Now, most people never even realize this department exists. Its entire job is simple: keep customer from leaving. And that's important because replacing a customer costs bank money. If lowering your interest rate is cheaper than losing your business, they may decide worth making you a better offer. Here is how to approach the conversation. Stay calm, stay polite, and say something like this: I've been comparing other cards with lower interest rate. I would really like to stay with your company. But if my APR can't be reduced, I will have to move my balance elsewhere. Is there anything you can do? Then stop talking. Let them respond. A lot of people feel awkward asking. But think about it in this way: you are not asking for a favor, you are negotiating. Bank negotiate every day. Most customers just never negotiate back. Will it work every time? No. But if you have paid on time, have a decent credit history, and have been with the bank for a while, your chances improve dramatically. Even reducing your APR by just 5% points could save hundred or even thousands of dollars over time. And if your bank still say no, don't hang up thinking you have lost. The next option: temporarily eliminate interest altogether. But there is one catch almost everyone misses. If your bank says no, don't assume you are out of an option. There is where balance transfer cards come in. Many cards offer a promotional 0% APR period that can last anywhere from 12 months to 21 months. That can give you valuable time to pay down your debt without interest pulling up every single month. But here is the mistake people make: they say 0% and stop reading. Most balance transfers charge a fee, usually around 3% to 5% of the amount you are moving. That doesn't automatically make it a big bill. It just means you should do the math before transferring. Sometimes you will save thousands, other times you will barely save anything. Here is one that's often overlooked: credit unions. Unlike many large banks, Federal Chartered credit unions are generally subjected to interest rate limits on many of their credit card products. That means lower APR, lower fees, and in many cases, better customer services too. If you have only compared offers from the biggest bank, you could be ignoring one of the cheapest borrowing options available. Sometimes the smartest financial move is simply changing where you borrow. If your balance have reached a point where minimum payments barely make a dent, don't assume bankruptcy is your only option. A reputable non-profitable credit counseling agency may be able to negotiate lower interest rate through a debt management program. Some people have reduced rate into a single digit, not because their debt disappeared, but because someone negotiated on their behalf. The important word here is non-profit. Avoid companies promising miracle debt elimination or guaranteed results. If it sounds too good to be true, it probably is. Finally, if you have lost your job, been hit with unexpected medical bills, or gone through another financial hardship, don't wait until you have already missed multiple payments. Call your credit card issuer early. Many banks have hardship programs that can temporarily lower your interest rate, reduce your monthly payments, or waive certain fees. The earlier you ask, the more option you usually have. And remember, bank would often rather help you recover than get nothing if you default. Now, you might be wondering, if this option is available around for years, why don't more people use them? The answer is surprisingly simple: because most people assume the answer is already no. They assume banks never negotiate. They assume interest rates are fixed. They assume there is nothing they can until they finish the paying the debt. And that's exactly why millions of dollars in is unnecessary interest get paid every single day. Banks are not hiding these options, but they are also not calling customer to volunteer lower interest rate. Think about it from the bank's perspective. If someone is willing to keep paying 25%, why would the bank lower it on its own? That's way one simple action, asking, can completely change the outcome. And that's really the biggest lesson from the entire story. Whether you supported Trump's proposal, oppose it, or never believe it would happen in the first place, doesn't actually change your credit card bill. Your balance doesn't care about politics. Your interest doesn't pause while Congress debates. And your bank is not waiting for a press conference before charging interest tomorrow morning. But here is the good news: you don't have to wait either. You have options today. Some take 5 minutes, some take little research, some take a single phone call. None of them require a new law. And even if you just one of these strategies work for you, it could save your hundreds or even thousands of dollars over the life of your debt. That's return that's hard to ignore. Now, here is something a lot of people don't realize. Even if you lower your interest rate, you could still be hurting your credit score without knowing it. One of the biggest reason is something called credit utilization. And here is the crazy part. You can pay your bill on time every single month, never miss a payment, and still lose points if your utilization ratio is too high. In the next video, I will show you exactly what a good credit utilization ratio look like, why it matters so much, and the simple mistakes that causes millions of people to take their credit scores without realizing it. Click on that video on your screen now because lowering your interest rates save your money today, but improving your credit score can save your money for years to come.